In this video, I want to highlight the advantages of treasury notes. When it comes to treasury notes investments, you could strengthen your investment strategy by keying into this particular instruments. So I want to highlight the advantages involved. Number one is safety and security. The treasury notes are backed by the government, making them the safest investment options one could have out there with virtually no credit risk. That is, the risk of default for a US government is very, very minimal, almost non-existing. So it's a safe investment, actually, very, very safe, and it's kind of secure. Number two is a steady income. When you invest in treasury notes, you have that regular income coming in form of interest known as coupon. And this income usually comes every six months, offering a reliable and a predictable stream of income for investors. Number three is medium-term investment. It's a kind of medium-term investment with maturities ranging from 2 to 10 years. So it offers a good balance between, short-term treasury bills and long-term treasury bonds. So it's like a kind of intermediate. When it comes to duration, it offers that particular that particular gap. It offers you that advantage, that possibility, that opportunity. We don't want to invest in treasury bill because of the shorter duration, and you wouldn't want to invest in government bond because with the longer duration. You may invest in a treasury note because the duration is somewhat acceptable. You can accommodate it. Number four is tax advantages. The interest earned on treasury notes is exempt from states and local taxes. You are only liable to pay federal taxes on this investment. That is, they are still subject to federal tax. And not only that, number five is liquidity. Actually, when it comes to investing in treasury notes, you discover that the instrument is relatively highly liquid. Treasury notes are actively traded in secondary markets, making them highly liquid. Investors can very easily sell, they can very easily buy without significant fluctuation. In other words, they don't stand to lose much value of their investments because the fluctuation therein is quite minimal. It's not much. It doesn't really fluctuate a lot. It doesn't fluctuate widely. And so you still stand to be able to recover your money without losing much, really, in case the fluctuation takes a downward turn. And not only that, there is this issue of diversification. Generally, when it comes to investing, it's very, very important and advisable you diversify. So treasury notes can help diversify an investment portfolio, offering a low risk exposure to fixed income assets that are less correlated with stocks and corporate bonds. So treasury notes are not all that correlated with stocks. In other words, when stocks is doing poorly, when the market is in stock is kind of bearish, treasury notes can still do very well. So there's no tangible correlation between common stock movements with that of a typical treasury yield in treasury notes. And number seven is predictable returns. Since treasury notes are issued at par value and it offers a fixed interest payment, so the returns are quite predictable. You could say, well, I expect to have a return by so months or so months, and it will come in regularly as at that particular month without default, without variation in timing. So your returns will come in regularly. You can predict it. Generally, they don't fail to give you your coupon. So it's a very important investment one could consider. It's attractive for those who are kind of conservative. They can't bear risk, and at the same time, they want regular income from investment. It's equally good for those who want to preserve capital. They've made their money. They are more concerned about capital preservation than even the interest payments coming in. Number 8 is you know they are widely available. The availability is it's not a problem. So treasury notes can be purchased directly from the US Treasury or from any other country's central bank, as the case may be, through what is called the treasury directs, or you can buy it from your brokers, making them easily accessible to both individual as well as an institutional investor. Is that why when it comes to availability, you discover that it's readily available to a wide range of categories of investors, both individual, institutional investors can have access to invest in the opportunity of investing in treasury notes. Uh, Number 9 is market stability. Market stability. As US government securities and any other government securities, treasury notes tend to be less volatile compared to corporate bonds or equities. So making them suitable because of the less level of volatility, is suitable for those people, investors who are risk averse. They cannot stand the kind of volatility that's obtainable in a typical equity investment, that is stock market investing. They cannot stand this. So this is a very good option for them. Number 10 is hedge against economic uncertainties. There's that particular hedge, that's mitigation against uncertainties in the economy during times of economic instability or market downturn. Treasury notes are often considered a safe haven, uh, you know attracting demand due to the low risk nature of this instrument. So it's some kind of safe, and it's a hedge against the usual market turmoil, market noise, market downturn. So you could skip or escape the turmoil in the markets if you are invested in treasury notes. So these advantages make treasury notes a popular choice for conservative investors who want regular, predictable stream of income, who want to diversify their portfolio, who also do not want to cannot stomach high risk, are risk averse, not really have the natural capacity to bear risk. They do not have the psychological makeup to bear risk. This particular investment is for those kinds of investors.